All right, today is Tuesday, October 27th, and this is the end of the day review for the live trading room. So we're going to take our performance for yesterday and today, we're going to plug it into our personal trading plan, and we're going to make some adjustments, and we're going to see where our 12-month income projection is based on the two categories that we track. So we track 9:30 to noon, taking all of the adaptive entry system signals, and we track from 7 a.m. Eastern to 4 p.m. Eastern, or whenever we cease trading, which is generally sometime between 3 and 3:30 Eastern. We're going to see how that looks, having taken just the trend bias and the trend continuation signals off of the adaptive entry system. So yesterday, in our 9:30 to noon category, we earned 15 points. Now, when we say points, we're talking about the NASDAQ 100 futures. We're trading a 5-minute chart. Each 1 point is equivalent to $20, so $20 of profit or loss per point, and that is on a per contract basis. So yesterday was 15 points with 6 trades. Today is 35 points with 11 trades. And then in our trend bias and trend continuation category, 7 to 4, yesterday we showed 42.5 points on 13 trades, and today 42 points on 16 trades. So I'm going to just quickly take a look at yesterday, because I know several of you like to see the individual trade detail. So here's yesterday, which is October 26th. First trade of the day, which we track from 7 a.m. Forward. And then the last trade of the day was at 3:20. And then today, first trade after 7 was 7:05. And the last trade of the day was actually at 2:20. All right, so we're going to pull up our personal trading plan, and we're going to start with the 9:30 to noon category. So we're going to go over to our data entry field, and we took 15 points of profit yesterday. So that's 15 times 20, and we have scaled up to 3 contracts, so that's times 3. So $900 of profit. And we did 6 trades yesterday, and each trade was 3 contracts, so that's 18 contracts. Today, we did 35 points, so it's 35 points times $20 per point, $700, times 3 contracts is $2,100. And today we did 11 trades, 3 contracts per trade, so it's 33 contracts. All right, now I'm going to jump over to the other category and enter the data first, and then we'll talk about what the projections are in each category for our 12-month income. So yesterday we did 42.5 points at $20 a point, $850 scaled up to 3 contracts, so $2,550, $2,550 of profit, 13 trades, 3 contracts per trade, 39 contracts. And then today we did 42 points times $20 a point, $840 times 3 contracts is $2,520. And today we did 16 trades at 3 contracts per trade for a total of 48 contracts. By putting the contracts in here, we then account for our gross profit and our expenses so that we can translate it into a net profit for the day. All right, so let's go back to our 9:30 to noon category. This is for folks who don't want to trade all day, but have the morning hours available. Very first thing I take a look at is these 4 numbers right here. We now have 16.4 weeks behind us of a 52-week plan. We have 27 days that we have lost, so 27 losing days in 16.4 weeks. And this number right here is what the average winning day is, 23.11 points. And this is our losing average day, so minus 35.67 points. And of course, that's $20 a point. The ratio of losing days to the number of weeks that we have already elapsed is factored into these averages. So when the plan is first built, when you first start before you've ever entered any performance data, the plan assumes a loss rate of 1 day per every 5 trading days. And so what we do is we factor in a frequency rate that may be higher or lower than that, so that we can properly assess, well, what is the average winning day if we factor in the fact that we have 27 losing days in 16.4 weeks, or we have 35.67 average losing day, but we need to factor in that there's a higher frequency of loss. So we do that as opposed to adjusting to a fixed number, because I don't know how this number is going to change. I don't know how the relationship between losing days and weeks is going to change over the course of our 52-week period. So by leaving it calculated as a variable, it will adjust as we have perhaps a higher frequency of losing days or a lower frequency of losing days. So we now know that our run rate for 16.5 weeks is 23.11 on our winning days. We now need to insert those run rate numbers into our future forecast. These numbers right here represent what we have already done, the run rate that we have established in our performance. These numbers are going to represent what the personal trading plan is going to forecast going forward for the balance of our 52-week plan. So 2311 is our winning day, and minus 35.67 is our average losing day. We've scaled up to 3 contracts. That's the maximum number of contracts we have the plan scaling up to, and we're at that number. So based on that, we will not add any more contracts during the course of our 12-month plan. We can add contracts, but I'll come back to that here in just a minute. So based on the current run rate and then forecasting forward, trading from 9:30 to noon, taking all signals, the current projected income is $171,025 based on trading no more than 3 contracts. That's having started with a $5,000 account and allocating 10% of the balance of the account to margin that is required for contracts. So in order to have more contracts, we need to have enough money in the account so that the margin requirement for those contracts will be no more than 10% of the balance of the account. I can increase the number of contracts at any point in time. It still will require that the number of contracts I put here as a max be less than 10% of the balance of the account. So if I decided I wanted to maybe improve my income forecast, I could increase to 5 contracts. And you can see that that changes it from 170,000 to 250,000. I think 3 contracts is a very reasonable max right now, and 171,000 is an outstanding income forecast for a small business owner if you started with $5,000. Okay, so let's go to our other category, and we are, again, we have 16.4 weeks behind us. We've had 17 losing days in 16.4 weeks, so we're pretty darn close to that 1 day per week per 5 trading days. And yet we still factor that relationship, the ratio of losing days to the weeks behind us, into our average run rate. So our average run rate for trading from 7 to 4, 7 a.m. Eastern to 4 p.m. Eastern, and taking only the trend bias and trend continuation signals, the average is 36.21. That's our average run rate for winning days. So I'm going to put that in our forecast, 36.21, and the average losing day is 22.4. So that's a slight improvement over where we were. So put that in at 22.4. So now our future forecast variables are in line with what we have established as an actual performance run rate. Again, leaving our contracts at a 3 contract max, that projects an income over the course of 52 weeks of $375,759. Your income will not be exactly that number, when you get to the end of 52 weeks. It might be reasonably close to that, might be slightly more than that, might be slightly less than that. There's no guarantee of that. It will all be based on what the relationship is of your losing days to the number of weeks and what your overall average performance is in both winning days and losing days. That's what drives all of this. Once you have a track record for yourself, beyond that, the trading plan is just simply the mathematics of saying, if you continue to operate, continue to perform, and continue to trade at this level, then here is what a reasonable estimate of income could be. That's what this provides for you. So one of the other very powerful components of the personal trading plan is knowing what your target is each day. So here, our target for profit is 36.21. Here, it's 23.11. So as Aaron and I were talking today, towards the end of the day, it was coming on 3 o'clock, we talked about where we were in terms of performance. So I know that the goal for today in the 7 to 4 category is about 36 points. Well, we're at 42 points. We're coming down to the last hour of trading. And the question we asked ourselves is, do we really want to expose ourselves to a potential loss of 20 points, which is our protective stop, which would be $400. So all of a sudden, we could have been at 22 points with no time to recover that, being that we would be in the last hour of trading. So we drew a line in the sand and said, we know what the answer to the question, when is enough is, and that was at that point in time. No reason to take on any more risk. We'd met our goal because we have the personal trading plan as our point of reference. We already knew at noon what our performance was in the 9:30 to noon category, so there was no decision making we had there. And overall, if we were trading 7 to 4 all signals, we were at 34 points. So 7 to 4 all signals was 34 points. You know, it's right in line again with what our 7 to 4 trend bias and trend continuation signals were. So based on that evaluation, we decided to stop taking any more trades. Now, what I just described to you is a process each of you should go through throughout the day. First of all, you should know what your target is. If you're trading 7 to 4 and your target's 36 points and you hit 35 points, you know, don't let 1.2 points stand between you and happiness for the day. It's a process that you go through where you learn how to evaluate your performance, how to input your performance into the personal trading plan, and then pay attention to what your goal is. And does that goal get you to a income forecast that you would be delighted with? If it does, then stop trading for the day and wait until the following day. Remember, you're not dependent on making 36 points every single day. That's an average. And there's also a factor of a losing day, you know, 17 days for every 16 and a half weeks, basically. Or in the other category, we're planning on losing at the rate of 35.67 points a day for every 27 days per 16 and a half weeks. So if you looked at this category and you know you started at $5,000 and your income projection was 171,000 and your goal for the day on positive performance is 23.1 and you hit 22, 23, 24 points for the day, you might want to stop. We get a lot of people early on in the day in our live trading room saying, I'm done for the day because I hit my goal. That is very satisfying to all of us as a team because we love being able to guide you to achieving your goal. But without the personal trading plan, you don't know whether 20 points, 25 points, 30 points has any relevance to satisfying your desire for income, financial growth, you know, abundance, whatever you want to call it. The personal trading plan answers the question, when is enough enough? And that number right there is the answer to that question. Now, you can continue trading if you want. You know, there's no rule that says you can't. You're a small business owner of your trading business, and it's entirely up to you to decide how you want to allocate your risk. We believe that when you hit your trading goal, it's a good time to quit trading. Let's just take a look quickly at our monthly summary. This is a new feature that Aaron added to our tracking tool here recently. Um, and in the categories that we measure on our personal trading plan now, we can just in a quick snapshot see what the total point production was during those months. You can see we had a little less production in September, a little less production in August, and strong production in July, strong production in June. We're going to see those numbers, roam between highs and lows, and that's exactly the way it should be. In our trend bias category, you can see here we're almost, with about a week to go before the end of October, we're almost right in line with the highest point production month we've had so far, which is June. So you can see what the average point production is for each of these categories. And then the 7 to 4 all, which is generally our optimum trading category, definitely behind where we were in June and July. But, it's a different month, it's a different environment, and we're going to continue to track those numbers. It just gives us more data. Overall, our 7 to 4 category is averaging, for the last 96 trading days, it's averaging $653 a day. Our 9:30 to noon is averaging $657 a day. Sorry, $357 a day. And then the optimum category, it's the category that when you blend together all factors such as the total number of accumulated negative days, losing days, as well as point production, as well as the win-loss ratio. When you compare those categories across the board to all the other categories, this is the optimum performing category. We're not tracking this in a personal trading plan. It's not necessary for us to do that. You understand the personal trading plan and how to use it properly. This is just showing you what the performance was if you traded from 7 to 4 Eastern and took all of the adaptive entry system signals, averaging about $1,267 a day. So $653 a day, $357 a day, $1,267 a day, and that's all based on trading one single contract. And those averages are based on having 96 days of trading history under our belt. So we're excited to help everyone and anyone who has a desire to start their own personal trading business, trade successfully. It's not a gambling thing that we're doing here, that you're doing. This is a fairly methodical, prescribed approach to trading. You can use the adaptive entry system signals. That tells you when to open a trade, when to close a trade, and then we track the performance, and then you use the personal trading plan to see how that performance will forecast out for the next 12 months. All right, so thank you for being here. Appreciate it, and we'll be back again tomorrow, 8:45 a.m.